Welcome to the Hughes Hubbard Anti-Corruption and Internal Investigation Practice Group's podcast, All Things Investigations. The Hughes Hubbard Anti-Corruption and Internal Investigation Practices Group represents many of the premier companies around the world, providing advice on issues spanning the full anti-corruption and compliance spectrum. In this podcast, host Tom Fox and members of the Hughes Hubbard Anti-Corruption and Internal Practice Group will highlight some of the key legal issues involved in white-collar and other investigations, both domestically and internationally. We will tackle topical issues involved in investigations, as well as explore how companies can prevent and detect issues that arise in conducting investigations on a worldwide basis. Hello, everyone. This is Tom Fox back for another episode. I'm absolutely thrilled today to have with me first-time podcast guest, Anna Hamati. Anna, first of all, welcome, and thank you so much for taking the time to visit with me today.
Well, thanks for having me, Tom.
Anna, we are here to talk about one of the most significant anti-money laundering or money laundering enforcement actions we've had in quite some time, and that's the TD Bank case. And I really want to take a deep dive into some of your thoughts. But before we get there, could you tell our listeners about your academic background, professional background, and the current focus of your practice at Hughes Hubbard Reed?
Yeah, I went to Northwestern University outside of Chicago and studied sociology, legal studies there. From there, I went directly to George Washington University for law school. And from there, I've had kind of an untraditional path. I went directly to Citibank, where I worked in compliance for 4 years. So there I worked in the anti-money laundering group as well as the sanctions group for approximately 4 years. And then from there, I joined the Treasury Department and was a policy advisor at the Office of Foreign Assets Control, where I focus mainly on Iran and Syria. And from there, I joined Hughes Hubbard Reed in 2022. And currently I'm a counsel here, and my current practice involves a wide range of AML, export controls, and sanctions issues. Do a lot of regulatory advisory work along with advocating for clients in front of the US government. We have domestic and international clients who come to us with all kinds of questions related to AML, sanctions, and other trade issues.
And as I indicated in my introduction, this is one of the most significant AML enforcement actions we've seen in quite some time, but a lot of commentary on this. But I'm really intrigued is sort of your top 5 takeaways. So with that, it doesn't matter to me where we start, but what are your top 5 in any particular order you want to go through them?
Yeah, that sounds great. So like you said, this is the largest penalty in the history of FinCEN. And I read through this pretty extensive consent order that was it's approximately 100 pages. And there's really a lot of information in there. But there are 5 things I pulled out that I wanted to discuss today and think are good lessons learned for compliance professionals in the field. So the first one I wanted to cover is how important it is to ensure that sufficient resources are adequately allocated to the compliance function. I think a common theme we saw throughout this consent order was that there was a major failure by TD Bank to allocate sufficient resources to implement and run an effective AML program. And there's some examples I'm going to highlight to kind of illustrate where we saw these lack of resources. In 2022, TD Bank's AML headcount decreased to less than 2020 totals. And that's while the number of transaction monitoring alerts of potentially suspicious transactions continued to rise. So the under-resourcing and understaffing was very apparent through lengthy backlogs within the AML function. The consent order highlighted 2 major backlogs that the bank was experiencing. The first was backlogs of alerts requiring investigators to review, resolve, and potentially file a SAR with FinCEN. And the second backlogs were of customers to be exited that the bank had determined presented an unacceptable AML risk to the bank. Unfortunately, the bank had opportunities to increase staffing to resolve these backlogs, but they didn't adequately address these issues. So for an example, the bank's BSA officer, who was acting as the head of the AML investigations unit at the time, knew they were short-staffed and actually delivered a presentation to AML senior management about resources, reporting that the AIU was understaffed by more than a dozen full-time employees. Even though the AIU identified this understaffing, They recommended waiting to reassess the need to hire new employees to fill that gap and extending contracts of temporary employees in the meantime, even though they also were discussing how the temporary employees weren't doing great quality work. And it was only once the bank came under regulatory scrutiny that those relevant issues were escalated and given sufficient attention. And then the bank significantly increased its AML resources and I think nearly doubled its AML staff over a 6-month period. So I think the takeaway with that is like backlogs are a red flag and they should be treated as an emergency. They're not things that you can kind of wait and see what happens, especially because as we know, backlogs really tend to increase if they're not addressed. So I think a good takeaway here is that banks should really ensure they're dedicating the proper resources to prevent those backlogs. And if you do get into that position, to make sure you have appropriate resources allocated to address that backlog. It's just a clear sign that the compliance program isn't functioning as it should be and that there aren't sufficient resources dedicated to clearing those. Another example of that is related to the bank's failure to remediate longstanding issues with the system it used to identify high-risk customers. So TD Bank's process for identifying and assessing high-risk customers was insufficient and improperly administered due to the bank's inadequate staffing and failure to maintain necessary software. So during the period of review, an AML senior manager reported issues related to the risk rating system, including how the risk scores for certain customers were displaying as a string of arbitrary numbers instead of a proper date, time, and score, which is how it was supposed to work. So an AML senior manager also flagged how a subset of those customers were inadvertently being omitted from the scoring as well, which resulted in identification of more than 500 US-based high-risk customers that had not been previously identified as posing a high risk by the bank's AML group. In response to these issues, along with others, I think it was June 2019, the BSA officer informed a bank risk management committee that projects intended to strengthen the bank's customer risk rating system and related processes were delayed due to technology and funding issues. So the BSA officer had assured the committee that these projects would get back on track by August 2019. However, by September 2019, they were still in red status with revised planning efforts then just getting underway. At the same time, AML personnel reported to another risk management committee of senior executives, including the BSA officer, that a backlog of 1.6 million customers had been identified that were never scored for risk rating. So the committee members ultimately recommended against any remedial work specific to this large population of unscored customers, in part because it would compete with ongoing risk-related projects and resources. So the takeaway with this example is the overview of issues TD Bank was having with the system used to identify high-risk customers showed that TD Bank didn't allocate enough resources to address these issues. I think it's pretty clear for those listening that if your screening is malfunctioning or you're not capturing the population you're supposed to, you really need to allocate resources to those problems. They're just not going to go away.
Anna, let me ask you, how can you confirm your program is functioning if you don't have the resources? And indeed, you have a backlog of over 1.6 million. How do you think through, or I guess, how would you advise, or maybe what's the takeaway of a functioning program through testing and auditing?
Yeah, so that's actually one of the 5 points I want to flag later as a takeaway from this case is testing auditing is really important part of ensuring that your compliance program is working. And really all 5 of these that I'm going to cover, these takeaway lessons, they all really work together. You can't have one without the other to have a well-functioning, adequate compliance program. So you need resources. And I think this is a really good example also of the bank was kind of unwilling to commit resources to the compliance program, I think to save money, right? But as we see now that they're facing a $3 billion fine, it's not a smart decision to cut with compliance. That's not the place to cut. That is a place that needs resources. If the compliance program is not functioning adequately, we can see that FinCEN will come for you and other agencies will come for you. So it's just a really important, it has to be a priority if you're a financial institution, if you're subject to the Bank Secrecy Act, that you have an adequate compliance program functioning. And testing is a really important way to ensure that your compliance program is working. It's not enough just to have a compliance program. You need to ensure that it's capturing what it needs to capture. And that requires resources.
What's next on the list?
The next takeaway is actually what we're just covering, which is you want to confirm that your AML program is properly functioning through testing and auditing. So not only is this testing auditing, as we just discussed, very important, independent testing for compliance is required under the Bank Secrecy Act. So I want to just cover a couple of examples of how the bank failed to conduct appropriate testing, which would have identified material gaps in their compliance program. So the first example I wanted to flag is the consent order highlighted how TD Bank failed to monitor a number of transaction types, including ACH, certain fund transfers, and certain monetary instruments. This failure to monitor represented over 80% of the activity in these types of transactions and aggregated to trillions of dollars in value. Because the bank did not conduct appropriate testing and gap assessments of its transaction monitoring system, these monitoring gaps persisted for over a decade. Additionally, there was subsequent coverage assessments which incorrectly reported that the transaction monitoring system covered ACH payments, even though that coverage was actually limited to international ACH transactions, which is a small portion of the total population of ACH transactions that TD Bank processed. That inaccurate reporting continued because the bank never conducted any mapping or testing to verify which types of transactions were covered by the transaction monitoring system. I think the takeaway with that is testing, auditing are essential in helping banks identify gaps in their screening system and allowing banks to confirm that their compliance programs are working properly. Another example of this is basically in 2014, FinCEN issued an advisory about funnel accounts. And during the time period covered by the consent order, TD Bank clearly understood the risks associated with this typology and the gaps in its coverage of them. However, unfortunately, TD Bank failed to implement adequate controls to manage those risks and close the gaps. So for listeners who aren't familiar with funnel accounts, they're defined by FinCEN as like an individual or business account in one geographic area that receives multiple cash deposits, often in amounts below the cash reporting threshold, and from which the funds are withdrawn in a different geographic area with little time elapsing between the deposits and withdrawals. So that'd be like maybe seeing frequent deposits in Michigan at an ATM, and those are withdrawn quickly in Mexico. So TD Bank doesn't have a physical presence in Latin America. However, its customers conducted millions of ATM withdrawals in that region. A sample review of ATM withdrawals from 5 high-risk Latin American Caribbean jurisdictions totaled more than $750 million from 2012 to 2024. Within that sample, the transactions in Colombia stood out as clear outliers. They accounted for nearly half of the $750 million of ATM withdrawals. So TD Bank's AML personnel identified customers engaged in funnel account activity in the spring of 2019. And AML investigators were also aware that bad actors actually targeted TD Bank because the bank maintained different policies than other peer financial institutions. Despite this awareness, TD Bank did not urgently address this issue, and they failed to take sufficient measures to mitigate funnel activity risks. 2 years after AML personnel began raising concern about funnel accounts, TD Bank finally developed a manual control to compensate for deficiencies in its ability to timely identify customers engaged in funnel account activity. So to date of the consent order, this manual control has never been subjected to appropriate testing to determine if its parameters are fit to mitigate the risks. So as part of the consent order, FinCEN's requiring TD Bank to conduct an AML program review to determine whether it complies with the BSA. So to this point of testing, to determine whether TD Bank is complying with the BSA, one of the elements to be reviewed is independent testing. So independent testing assesses whether TD Bank conducts periodic reviews and tests of its AML program designed to evaluate and improve its effectiveness in preventing and detecting money laundering, terrorist financing, and other illicit finance activity, including by taking into account ongoing or recently completed enhancements to AML-related systems. All this to say is that, again, it's not enough to have a compliance program in effect. Testing is an essential aspect to make sure the compliance program is capturing what it is intended to capture, that illicit activity. And then as a final note, the consent order highlighted how in TD Bank's testing of its AML risk assessment process, internal audits simply determined whether controls existed and not whether they were being appropriately used. So overall, again, it's not enough to have a compliance program in place. It's important to test the compliance program to make sure it's working as desired and capturing all of the activity it's meant to capture. But it's also just not enough in the testing process to confirm whether controls exist. The testing process should really ensure that the controls are being properly used as well.
And what, if anything, did you see around the issue of compliance and tone at the top?
That's a great transition, Tom, because that brings me to the third takeaway I want to hire, which I truly feel is one of the most important aspects of a compliance program, if not the most important, which is companies really need to have a strong culture of compliance from the top. What you see in this consent order is that despite TD Bank's management's awareness of significant deficiencies in its compliance program, the bank willfully failed to implement an AML program that met the BSA requirements. So I'm going to give a few examples that the consent order highlighted showing that TD Bank management was aware of problems, but made affirmative decisions not to address those problems. So the first example is, as everyone knows, under the BSA, banks are required to file a report of deposits, withdrawals, exchanges of currency, or their payments or transfers through financial institutions which involve a transaction in currency of more than $10,000. Including multiple transactions that aggregate to more than $10,000. So TD's consent order noted that the bank filed more than 1,000 CTRs with incomplete and erroneous information. And in many instances, they failed to collect a form of identification for parties conducting such transactions. So the bank had been aware of this issue since 2019, when the bank learned that its CTR application failed to verify whether an identifier like a social security number or et cetera, was collected within a CTR. And the bank did not promptly address this issue. And as of 2021, which 2 years later, the defect remained unsolved. So the bank considered it a low priority and postponed any effort to implement a resolution. So the takeaway here is really the culture needs to emphasize the importance of compliance. And when issues like this are discovered, they need to be prioritized. Meeting compliance requirements or deadlines, they have to be prioritized until they're addressed. I think also what's really, as someone who's worked in this space, continues to work in this space, I don't want to make fun of tax regulations, but BSA regulations aren't like tax regulations. You're not required to meet tax deadlines here. I'm not saying those aren't important, but I think it's helpful for companies to really remind employees what the mission is here, and that's to help law enforcement fight crime. You can see in the TD Bank consent order how these failures led to real world issues and real world criminals getting away with criminal activity because of these issues in compliance. So I think it's also really important to remember when you work in compliance what the mission is, because it's a really important mission. I think we all care about preventing crime. Another example that I want to share is of TD Bank's weak culture of compliance, which is illustrated by their compensation system. So the consent order highlighted there was a disincentive for the bank's BSA officer to incur costs needed to ensure the bank's compliance with the BSA. And specifically, both the global head of AML and the BSA officer's annual self-assessments noted as an accomplishment their respective abilities to develop the AML program with a flat cost paradigm without compromising risk appetite. So the takeaway there is that illustrated that TD Bank's compliance management was incentivized to not spend money on the compliance program. For compliance professionals listening, you don't want to have a culture that, where your compensation system incentivizes management to not spend money on compliance. And as I said earlier, like devoting resources to make sure the compliance program works adequately is incredibly important. And as a bonus, this type of culture where people are incentivized to not spend money on compliance will likely end up costing the company significantly more in the long run, as we're seeing here with TD Bank. The final example I wanted to share about the culture relates to a section of the consent order that discusses how TD Bank processed about $75 million worth of Zelle payments over 6 years without implementing a scenario for AML screening that was adequately tailored to the Zelle product. So as way of background, Zelle is a type of peer-to-peer transfer, kind of like Venmo. And those are just types of systems that allow consumers to make payments to other consumers, usually through a mobile app. And the apps are typically linked to debit or credit card accounts or bank accounts. So they allow these fund transfers to proceed through bank-maintained payment networks. So basically what happened with TD in this scenario is Rather than developing scenarios that were specific to the money laundering risks Zelle posed, the bank monitored Zelle's personal transactions through scenarios used to monitor debit card transactions and wire transactions at separate points. That's something to think about. Like, wire transactions are quite different than, let's say, ATM transactions and these peer-to-peer types of transactions. So the scenarios really need to be tailored to the risks that each type of transaction poses. And they vary in risk because they're different. They're just different types of transactions. What I wanted to highlight was basically that the AML management of TD Bank stated that based on direction they had received, the bank would not introduce any new scenarios unless there was an exposed risk or regulatory need, and that unless absolutely required, new scenario development in the transaction monitoring system is regrettable spend. Although TD Bank's management was aware that they had failed to implement effective scenarios addressing risks specific to Zelle, even after staff had flagged monitoring gaps, they didn't implement a tailored scenario until 6 years after Zelle's launch, which is 2.5 years after the initial request for the scenario was submitted, and the bank was aware they were facing increased scrutiny by regulators. This highlights how compliance was just not a top priority for TD Bank. And despite identifying multiple issues, management didn't do anything to address them. And what's really unfortunate with this example is compliance officials subsequently linked activity involving TD Bank Zelle to human trafficking. This criminal activity might have been caught earlier if TD Bank had a better culture of compliance and prioritized addressing issues within their compliance program. And just as a final point on the culture is I just want to emphasize again how important it is to have a strong culture of compliance at your organization from the top. It's so important that any bank or financial institution's senior management provides strong, explicit, and visible support to the compliance program. Every level of the organization should be committed to adhering to compliance obligations, and there should be a culture of ethics and compliance throughout the organization.
So, Anna, what do you see in terms of either comments from the OCC around training or lack of training, which was referenced in the enforcement action itself?
Training, again, like all these takeaways, they all really tie together. You need to have every element of a training program or of a compliance program. Like, you need to have the training, you need to have the culture, you need to have all these elements in order to have a successful compliance program. If you're missing one, you're just not going to be able to have an adequate program. And I'm actually happy you asked that question, because that's actually the next takeaway I wanted to highlight, which is that compliance programs need to make sure they maintain an adequate training program. So the BSA requires banks to conduct ongoing training for appropriate persons. A review of TD's consent order revealed multiple examples of how TD Bank failed in their efforts to properly train their employees on AML risks. So the first example I want to discuss illustrates how TD did not tailor its training program for both AML compliance personnel investigators and retail branch personnel that are frontline. So the bank had identified an increasing trend of apparent funnel account activity, including multiple debit cards linked to the same account being used to withdraw large amounts of cash via ATMs in high-risk jurisdictions. Even after developing potential red flags and a methodology to identify the accounts, AML personnel did not provide updated training to the retail employees or visit branches identified as onboarding the high-risk customers. I think this is such a great example because it shows that you can have a great compliance program in place. Like, you can identify the red flags, you can have a methodology to identify these accounts. However, if you don't train your employees that are supposed to be enforcing the compliance process, the compliance program won't be effective. Another example I want to highlight that relates to TD Banks providing insufficient direction to their staff and training is related to unusual transaction referrals. So we have background. Unusual transaction referrals, or UTRs, are referrals that TD Bank's AML function receives from the bank's business lines and other internal sources regarding unusual or potentially suspicious activity observed by employees in those business segments. So employees will manually submit a UTR form if they detect any unusual or suspicious activity, which, pursuant to bank policy, should be triaged by AML within 24 hours of receipt. Excuse me. So the consent order revealed that the bank's manual processes around the UTRs included training training related deficiencies, especially with respect to specialized red flags for higher risk activities and on more fundamental concepts as to how and where to file UTRs. So the AIU analysts who reviewed UTRs often missed money laundering typologies or provided incorrect guidance to other bank employees. Two major mistakes that were made included that TD Bank investigators failed to use important information from the UTRs as a basis for filing SARs. So they failed to include the relevant person's name in the UTRs as subject of the SARs. Another major mistake that was made was AML personnel instructed branch personnel to not file additional UTRs on the same type of activity, even when that unusual activity continued. And the reason they gave for that was the involved persons were already under investigation. These training failures impacted a real-life law enforcement investigation into the C network, which involved a man orchestrating a $653 million money laundering conspiracy. So the takeaway here is that, again, you can't have an effective compliance program without adequate training. The people implementing the compliance program need to be trained properly in order to carry out that compliance program. Further evidencing the importance of training, FinCEN's consent order requires an AML program review to determine whether TD Bank complies with the BSA. And as part of that review, there's a required section on guidance and training. And that asks for information on the extent to which TD Bank maintains mechanisms to provide periodic training for all TD Bank personnel, including training tailored to TD Bank's money laundering and terrorist financing risks, and the recipient's roles, responsibilities, and geographic location within TD Bank, as well as training that incorporates TD Bank's prior compliance failures and records of successful completion of such training. Again, this just emphasizes how important training is to having an effective compliance program. And I think with that, I have one more takeaway I wanted to highlight, which is the importance of filing timely and accurate CTRs and SARs. And just briefly for background, CTRs are the currency transaction reports. SARs are the suspicious activity reports, which play a significant role in FinCEN's core mission to safeguard the financial system from illicit use through the collection of financial intelligence. FinCEN and law enforcement depend on the accurate and timely filing of CTRs and SARs by financial institutions to develop an understanding of the movement of funds that are likely associated with criminal activity. Because of this, it's incredibly important that banks ensure that they're filing timely and accurate CTRs and SARs. This may seem like a basic takeaway for any compliance professionals listening, but I'm hoping to highlight how TD Bank failed to fill CTR and SAR duties under the BSA so listeners can really understand what's at stake when these aren't filed accurately and timely. So the first example I wanted to talk about is related to TD Bank's violations of its CTR requirements. Those involve two main deficiencies. The first are late filings of the CTRs caused by both longstanding and known technological issues. And second, willfully filing more than 1,000 inaccurate CTRs. So FinCEN's investigation identified more than 4,000 late filed CTRs, covering more than $150 million in cash transactions filed weeks after the required deadline. AML senior management identified the causes of some of these late filed CTRs, including the inability to track all cash transactions to reconcile what should have been filed compared to what was filed in CTRs, resulting in outstanding CTRs that were roughly 6 months after the filing deadline. TD Bank also filed inaccurate CTRs, which hampered law enforcement investigations. Specifically, the bank failed to report the individual conducting the transaction or collect accurate information about the customer as required by CTR requirements, and then failed to accurately report more than 500 CTRs covering transactions totaling more than $400 million tied to C, who's in trouble for money laundering. So by misidentifying the conductors of these transactions, TD Bank impeded law enforcement and FinCEN's ability to identify and track unlawful behavior. Additionally, the incorrect CTRs, which listed the wrong individuals as being involved, misled law enforcement and caused the investigators to go after the wrong subjects. So the takeaway here is it's just very important that compliance professionals ensure that they're filing CTRs on a timely basis and including adequate information in order to comply with the BSA and maximize the utility of CTRs. These aren't things that should just be filled out and submitted to meet the time deadlines, the timing requirements. Like, these should be done. There's an actual use by law enforcement of these CTRs to go after criminals. So it's just very important that they're done properly and done on a timely basis. Now we'll turn to TD Bank's deficiencies with their SAR filings. So in the consent order, FinCEN highlighted how it identified thousands of suspicious transactions totaling approximately $1.5 billion, for which TD Bank failed to timely and accurately file a SAR. Of that activity, TD Bank underreported amounts in multiple money laundering networks and missed involvement of employees at TD Bank who facilitated suspicious transactions. So the consent order actually has 5 categories related to the SAR filing deficiencies, and I'm just going to highlight 2 here. The first is just late filed SARs, and due to TD Bank's persistent underinvestment and lack of resourcing, this behavior caused substantial and persistent backlogs of developments investigations of potentially suspicious activity. The bank didn't treat these issues with a sense of urgency and followed plans to gradually reduce such backlogs. So during the period of those backlogs, TD Bank willfully failed to timely file over 6,000 SARs, where the aggregate value of the late report suspicious activity exceeded $500 million. Again, this is I think, obvious takeaway, but if SARs are being filed late and there's a backlog, this is an extremely urgent problem, and banks need to deal with that problem accordingly. So that, I think it's just a really clear sign that if SARs and CTRs are not getting in a timely manner, your compliance program there are issues that need to be fixed. There's systemic issues, and you don't want to find yourself in a situation like TD Bank. So it's good to see those for the red flags that they are and address them. And then the other category I want to highlight was involving customer group B. So of the missed and improperly reported suspicious transactions identified by FinCEN, over 300 were transactions processed by customer group B, mainly over a period of around 5 years from 2018 to 2023, with an approximate value of roughly $1 million. These transactions included nearly $15,000 through Zelle, which I was discussing earlier, that were linked to human trafficking at massage parlors and money laundering. Since the majority of the funds incoming to customer group B's accounts were in the form of cash or other unattributable sources, TD Bank lacked an understanding of the origin of funds going into customer group B's accounts. So TD Bank did not report that suspicious activity until nearly 5 years after it began. So again, as I discussed previously, TD Bank did not tailor transaction monitoring scenarios to address the risks that were posed by Zelle. And TD Bank's failure to identify the Zelle suspicious activity stemmed directly from this failure. So by 2021, the bank was aware that Zelle transactions at the bank may have links to human trafficking. The bank failed to update its transaction monitoring scenarios. It ignored internal recommendations to implement such scenarios. And as a result, the bank failed to effectively monitor or report suspicious Zelle activity linked to human trafficking throughout the relevant time period. So the takeaway here is, if a compliance professional is detecting activity that's suspicious, that was missed for whatever reason, that is a sign that the bank is not complying with its BSA obligations and needs to make changes urgently. This needs to be prioritized. So I think that's all I have on 5 takeaways for compliance professionals based on this TD case.
Well, Anna, that's certainly comprehensive. Unfortunately, now we are near the end of our time for this episode. But before we leave, I wanted to ask you if our listeners wanted any more information on your practice, or perhaps even to connect with you, what might be the best place for them to go?
I have a LinkedIn page. You're welcome to connect with me there. I'm welcome any questions anyone has if you want to discuss anything. You can also find my email and my phone number on my firm's website. It's Hughes Hubbard Reed. And I welcome any contact or any questions you all may have.
I wanted to thank you again. Congratulations on your first podcast. We got through it, and I'm looking forward to continuing this conversation.
Great. Thank you, Tom.
This is Tom Fox again. Thank you so much for listening to this episode of the award-winning All Things Investigations. If you've enjoyed this episode, I hope you'll subscribe, rate, and review wherever great podcasts are listened to. All Things Investigation is a production of the Compliance Podcast Network.